All right, a big shift coming right in the heart of the spring housing market, something we haven't seen in quite a while. Diana Olick joins us right now with more. And what's the shift that we're seeing right now, Diana?
Well, Becky, it's prices. They are still gaining slightly, but they are slowing down quickly. And in several major markets, they are now lower compared with a year ago. Take a look at these numbers from Parcel Labs, which runs real-time price data. Miami, Atlanta, Tampa, San Francisco, Nashville, and Minneapolis are now negative year over year in prices. And Austin, a major pandemic migration market, is tanking. Other large markets like Phoenix and Denver, they're right on the verge of being in the red. Now, another report from Redfin showed home sellers gave concessions to buyers in 44% of sales transactions in Q1 of this year. That's up from 39% a year earlier and just shy of the 45% record high at the start of 2023. Those include money toward repairs, closing costs, and or mortgage rate buydowns, but not price cuts. Now, something else in the March numbers. The median price of a newly built home was slightly lower than that of an existing home, and there is usually a price premium for new construction, so that's not normal. Part of this is builders lowering prices and offering more low-priced homes, and still a relatively tight and overpriced existing home market. Now remember, home prices are up over 50% in just the last 5 years, which again is something else not exactly normal. So even with builders cutting prices and more supply coming on the existing home markets, buyers have hit the pause button right at the height of the all-important spring market. Becky?
Why do you think buyers are pausing? Does it have anything to do with mortgage rates, or is it more related to uncertainty and concern about what might be happening with their jobs?
It's all of the above. In fact, we were at an open house in Dallas yesterday, and I spoke with several buyers who said, you know, they like the house. There's plenty out there. They have the money to do it, but they're just hitting the pause button because they're nervous. They're nervous about what kind of other of their costs are going to go up due to inflation. They're worried about their jobs. They're worried about the broader economy. And they're saying, you know, we're out shopping. We're looking. We love it. Just can't pull the trigger.
I guess part of it is watching mortgage rates. I don't know if people expect rates to come down, if they think the Fed's going to be forced to cut rates at some point, if they've watched particularly what's happened recently with rates climbing higher, just from concerns all the way around.
No, actually, mortgage rates weren't as big a factor, and I was surprised at that. I think people are getting used to this new normal of the kind of above 6%, around 7%, because mortgage rates have really been kind of teetering in this very narrow range between 6.7 and 7.1% really over the last year. They said it's not necessarily the mortgage rate, it's that overall uncertainty about how they feel about their own personal wealth. Remember, as I always say, a home is most people's single largest investment, and it's really hard to make that payment when you're worried about the rest of your economic situation.